You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody, let's do it. Let's dive on into the world of all things crypto derivatives because it is time for the Crypto Rundown. My name, of course, Mark Longo. I will be your host, your guide, leading you to the world of all things crypto. Having all sorts of fun here on the show today. Of course, if you like what you hear, no matter where you get it, on demand, on your platform of choice, or via our app, wherever you get the show, do keep rating and reviewing. It really does help new folks discover the show. If you're listening via the app, just, of course, leave a rating in the old app store. It helps new people discover the content all the time. And speaking of discovering content, if you want to discover even more content than just a Crypto Rundown, A, of course, check out the full network. And then B, you can go above and beyond and upgrade to the pro side, where now, of course, that gives you access to all of the great exclusive pro content we're doing here, including great pro Q&As. A lot of them have been in the crypto realm. So a lot of great pro Q&A sessions we have already in that feed for you to check out over there, as well as Options Oddities, where we break down the week that was from a weird trades and trends perspective. Of course, you get live access to this, everything else we do. And if you join quickly, you get your name entered into the hat for the drawing for the January Pro Trading Crate that will expire at the end of the day tomorrow. So got to be active in the month of January on the pro side to have your name in the hat to win fabulous prizes. And let's see who's joining me today to help us all win with some crypto knowledge, holding down the hot seat out here this week. Our old friend, Mr. Bill Ulivieri from Cenacle Capital Management. Mr. Bill, welcome back to the Crypto Rundown, sir. It has been too long.
Thanks for the welcome, warm welcome, and it's great to be with you in 2023, Mark.
Yes, a new year kicking off. I just checked, and you haven't joined us since November of last year, so it's been a little while, Mr. Bill. So before we get into the fun from this week and everything, let's start looking back a little bit. As you look back on the mad, topsy-turvy year that was 2022, sir, what really stands out to you on the crypto side? What were the major trends or trades or developments, or what really resonates to you at the end of the day when you look back on the year that was crypto 2022, sir?
You know, honestly, Mark, it was bittersweet. I mean, on the positive side, we had big firms like BlackRock, JP Morgan, Goldman Sachs, PayPal, MasterCard, all these mega companies, right, moving into the cryptocurrency space, into blockchain. Adoption has definitely took a step up in terms of the media and what was out there. On the bad side was the Bernie Madoff-like event with the FTX exchange, with the Grayscale Bitcoin Trust, again, which we own for clients, trading at a larger discount because it was uncertain as to who was holding what tokens, how Grayscale might be affected by that, as well as Coinbase, and every platform, every exchange, everything that touched crypto was in a really weird place. So again, it was we kind of live by the sword and die by the sword in this space. And, I think most people would say that last year was really tough emotionally and financially, in the cryptocurrency space.
Yeah, we certainly hit the highest of highs and the lowest of lows last year in the crypto market, not just from a price perspective, but certainly on the low side from a trust perspective. A lot of people having their faith in the crypto ecosystem shaken a little bit last year, Mr. Bill. All right, let's dive into all the fun stuff that's lighting up now. Let's dive into the Bitcoin breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we break down all the action in the world's leading digital asset. Yep, we're talking about the big dog, which is Bitcoin, a wee bit smaller, just a smidge from where it was this time last week. Of course, talking on the show last week, it was all about just the massive run-up we've seen out there in all things Bitcoin and indeed crypto since we kicked off the year. This week, hitting the pause button a little bit out there. At the end of our last show, we were at 22,751. Coming into the start of the show today, 22,727. So down almost 24 handles from where we were this time last week. But other than that, not a heck of a lot of difference, even though they tried to rally it, listeners. They tried to push it. It got as high as almost 24,000, 23,902. That was just last night, Sunday night, and the low came a few days after our show on Wednesday, 22,434. So a decent little range over there, listeners, about 1,500 handles. That's nothing to sneeze at out there in Bitcoin land. Of course, we've seen crazier ranges. We've seen crazier days even than that, but still interesting stuff nonetheless. Before I get into all the vol and everything else, Mr. Bill, it has been an intriguing kickoff to the year here for the crypto folks out there. Mostly rallies across the board, including in the big dog Bitcoin. What is catching your eye out there these days, Mr. Bill, as Bitcoin continues to move northward, even though maybe hitting the pause button a little bit this week?
Well, what is coming to my attention, Mark, honestly, are two things. And I think everybody's watching these, at least I am. One is, of course, the Bitcoin stock to flow ratio, which is that economic model, forecasting model that predicts or forecasts that Bitcoin will be at X amount per token by an X certain date, right? So right now, we undershot our target huge. So Bitcoin was expected to be around $109,000 per token on January 7th, say the first week in 2023. It's traded about 17,000 coming into the first of this year. So, but we're seeing an uptick. We're seeing like this positive movement, this slope in the stock to flow ratio. So I think a lot of people are holding their breath as to say, is Bitcoin, even though it's behind its ball and it's done this before, could it potentially hit its stock to flow ratio in 2023 at around $110,000? Well,
that would be an impressive move if they made it all the way up.
It's not unprecedented because remember, COVID was trading $4,800 during the pandemic, and then it went up to $60,000, at the end of it. So it's not like it hasn't happened before. 2022, I called the year of extremes. We saw it across the board in every asset class. Technology, QQQ, Amazon, Tesla. I mean, you name it. Some of these tech stocks were down 90% from their high. Amazon down 57% peak to trough. But anyhow, so all things considering, everybody's watching the stock to flow ratio. And what I think they're watching is the US dollar. US dollar made these massive highs. Everybody talks about the collapse of Western civilization, the Great Reset, the great unraveling of the US dollar. Most of my phone calls that come into our firm are about buying gold and why I don't want to buy gold. But honestly, you look at the chart of the US dollar, goodness gracious, this thing was on 20-year highs, basically. And I think that caught everybody off guard. And we saw, of course, that rally in the U.S. dollar with the raise in interest rates from the Federal Reserve, right? The tightening of, slowing down of the economy. But the dollar, which was trading at 114, the dollar index at 114 is trading 101 now. And it looks like it's in a secular bear market. I shouldn't say secular bear market. I would say it seems to go through these 8 to 10 year rallies, like ebbs and flows. And I think we might be at one of those times where, okay, the dollar did its thing, and now it's time for emerging markets as an asset class and cryptocurrency to begin exercising and taking control of their strength. And so I think the U.S. dollar comparable to stock to flow ratio, in my opinion, are the two big things of 2023 and the subsequent reversal of those two things. Very interesting, I think.
Very interesting indeed. So my next question was going to be, are you a believer in this rally we have right now? But it sounds like if you think there's even a chance we can get close to that stock to flow number, then you are a buyer of what they're putting down right now, Mr. Bill.
Mark, last night in preparation for this interview, I looked through 238 cryptocurrency charts. And you've heard me say this before. Like, I cannot be completely objective when I'm talking about this because, again, as an asset manager, as someone who's managing assets for other people, we only have like a 3 or 4% position in cryptocurrency, right? So if it goes to zero, this whole thing unwinds big time. It's still not going to derail anyone's retirement plan, right? We're not over leveraged. We just own it in our accounts. Having said that, looking at 238 charts, I would say that there's 220 of them look good. I mean, in terms of putting in the bottoming action, like this kind of triangular shaped looking bottom, where we didn't put in lower lows during the FTX collapse. We didn't put in lower lows, from the summer of the technology decline. Even Coinbase going from 41 to 62 like the other day. We're just seeing an interesting shift in risk on. Money is moving back into the market. It's going back into bonds, going into the market, going into crypto. And honestly, I walked away. I went to bed about 11:30 last night, shaking my head saying, oh my gosh, I have got to start really building and holding a bag of cryptocurrency because I think the low is in. I think the winter's over. We experienced, again, a ton of regulatory issues, the FTX scam. We still have some issues out there, of course, with, custody and assets. But I don't know. I just like the way technically these things are looking. I like the way they respond. I like the year-to-date performance. I like everything about it right now.
Don't hold back, Bill. Tell us how you really feel. I'm sure I gave you that much homework coming into the show today. 238 charts to review. But hey, got to put in the hours right here to talk about all the fun here on crypto. And there is a lot of fun to be had here. Bill's optimism and enthusiasm aside, do you share that, listeners? Are you as optimistic as Mr. Bill is here? Are you buying what the market is selling right now? Taking a little bit of a pause this week, but it has been a pretty strong rally already to kick off the year, even in some highly distressed assets like Solana. We'll get to all that fun a little bit later in the show. But first, to the big dog we go. Bitcoin, like we said, had an interesting range this past week. The vol, after getting pretty frothy, even though it had a decent range last week, coming in a wee bit this week. We were at a little north of 63 on the show last week, about 63 and a quarter. Coming into the start of the show today is 52 and a half. By the way, if you want to check out these numbers in a lot more detail, only one place you can go out there. That is amberdata.io, AMBERDATA.io, formerly known as gvol.io. Of course, they acquired them last year. You can still go to that IO or that URL. That also works as well. But amberdata.io, the place to go to kick the tires and light the fires. You can see this data and a whole bunch more. We really do just scratch the surface of what's available over there. Only an hour show at the end of the day, listeners. So only so much time, so much data we could squeeze in. But a lot of it can be found for you there, amberdata.io, including what's going on with the skew right now. Last show, we were very intrigued to see that the skew had swung back to the positive out there in Bitcoin. If you've been listening to this show for a while, if you've been following these assets for a while, you know that the historical shape of the skew for products like Bitcoin has been positive. People are mostly bullish. They're hodlers. They're super optimistic like Mr. Bill out there, and they want to just buy upside, buy calls. They're generally bullish at the end of the day. And that was the way the skew pretty much was since inception until pretty much this past year and change, when we saw a lot more dark side peeking in and the puts started to take precedence out there, started to gain the premium from a volatility perspective. And so for the better part of last year, we were hanging out at a negative skew. Last week, we finally flipped to the positive 3.25. So it wasn't blowing the doors off, but it wasn't -4 or -6 anymore either. So very intriguing there. This week, kind of coming back to equilibrium again. It's pretty much flat, about 0.7 of a point bid to the upside, which ironically is almost exactly where it was a couple of weeks ago as well. So we had a little bit of a surge to the upside, now kind of hovering back flat, which again, if you look at the price action in Bitcoin this week, kind of balancing out right now, kind of makes sense that maybe the skew would kind of balance out a little bit as well, waiting for that next shoe to drop out there. What is dropping, though, is the OI coming in a little bit over there on Deribit. 181,000 calls open on Deribit right now. That's down about 8,000. Not a huge move, but a little bit. The put's down to about 76,000. That's down about 6,000. We're still hanging out at a little bit more, about almost 2.5 to 1 calls over puts, which is historically about the right range there for Bitcoin options over there on Deribit. Let's look a little bit farther afield and see what's going on out there from a size position perspective. What's going on out there? What are these size open positions in Bitcoin options out there right now? What are you folks up to? Well, let's find out. Are you sharing Bill's optimism? Are you fading the heck out of this rally? Let's find out. Number 5 here. Let's do a quick top 5 listeners. Number 5 is the 25,000 strike. That has 14,000 contracts open. That is a newcomer to the top 5. In fact, a lot of shakeup in the top 5 this week, which is kind of interesting. Number 4, going up to 28,000. Remember I said, listeners, coming at the start of the showtime, we were at a little bit north of 22,000, about 22,700 and change. So we had 25K at number 1, and then 28,000 number 2. Here, 14,500. Of course, that's new to the top 5. Then number 3, right back down again. 24,000 strike number 3 with 15,000 contracts open there. That's also a newcomer to the top 5. So bottom half of our top 5, all new additions, which is kind of interesting. Number 2, it's back, listeners, and it's climbing. It is the 30,000 strike. So somebody's listening to what Bill's whispering in their ear. The 30K strike. It was our number 1 position for a long time out there. Kind of fell off with expiration at the end of December. Fighting its way back now. It was gone for the first week or so. They knocked it out of the top OI completely. Now it has 17,000 contracts open. It's up nearly 2,000, about 1,800 contracts piling back in this week. So slowly climbing back up the ranks, all the way back up to number 2 right now. If it wants to take the number 1 spot, what does it have to replace? It's the 23,000 strike, 17,500 contracts open. That's up about 3,700 from this time last week. So again, 23,000 strike. Pretty close to at the money right now, which is interesting. And also, I like to see that. I mean, I know the crazy outlandish strike, 60,000, 100,000 that used to be open for side. Those are all fun to talk about on the show here, but it's nice to see. I think it makes for a more healthy ecosystem when we have the at the money strike lighting it up as opposed to these, shall we say, obscure strike. Mr. Bill, what are your thoughts on everything I was putting down there? Are you A, surprised that we've seen so much shakeup out there in the Bitcoin size positions? And B, it is a bit of a shakeup in and of itself to see pretty much the at-the-money strike now dominating the options positions, where in the past, when you'd come and join me on the show a year or 2 ago, it would all be, shall we say, ridiculous nonsense. Not seeing that right now.
Well, Mike, I'm trying to think, back to the days of the trading floor where, we had a risk manager who would say, you've got to buy in the wings if you're going to be short all the at-the-money stuff and options. And then you had those times where people were selling butterflies and they were buying at the money and then selling the wings. And I look at the skew chart at the CBOE. They have an index. It's a skew index. And again, this is at the low end of the range, going back 10 years. I mean, we're definitely in the low end of the skew range. So I just ask myself, is it still the belief that Bitcoin is not a thing? Is it still a belief that cryptocurrency is not a thing? Is it a belief that the bond market and S&Ps and QQQs, it's like it's just, is it part of that? Like people, like we're risk on as a firm, but maybe everybody else is risk off. So it's a great question. I am encouraged by the fact that being a contrarian, not seeing huge open interest in the out of the money options, right? Way out of the money, but it seems to be the larger numbers in the at the money stuff. So you don't know until this plays out, right? I mean, again, all this stuff fascinates me, and you don't really know exactly what it means until the thing unwinds, right? It's like a spring that's being wound, like a clock, like an alarm clock, tick, 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 tick. You're cranking the ratchet, and we see bigger and bigger open interest, bigger and bigger volume, and then all of a sudden you're just going to see things explode and expand, right? So let's just, it's too soon to tell. It's only the first month of the year, right? As an asset manager, we kind of wait for the first month to go by to see what the future might hold for asset classes. And I want to see where this Bitcoin thing is going. And I'm not sure that all the data in the derivatives market tells us exactly where it's headed. So we'll see. Stay tuned.
Yeah, speaking of that volume here, let's see how we fared from a volume perspective since our last show. And the answer is not terrible, not great, kind of just right in the middle there. On our last show, we saw the previous high was about 79,000 contracts. That was back on January 13th. This week, looking back, the busiest day was the 25th with about 49,000 contracts. So a lighter week out there, not a ton of paper, which kind of makes sense. We had a little bit of a range, but for the most part, Bitcoin kind of stalled out there until the little bit of a rally we saw there on Sunday. So intriguing stuff out there, not exactly rock'em sock'em robots times. Of course, we go back to the insane days of last November with all that FTX madness. We saw well over 100,000 contracts on the tape, 113,000 contracts on that Tuesday when all the madness was hitting. So kind of hard to compare to that, but obviously a decent week, but nothing to write home about out there. Let's go on out to Bill's favorite product, which is Bitto, to see if anything is worth writing home out there. When we kicked off the show, Bitto was hanging out at right about close to where it was this time last week. I think it was down about a tenth of a point at about a 1440. Looks like it's given that back up again now, down to about 1430 again. So down a whopping 0.2 of a point on the week, which again, kind of keeping in line with what we're seeing out there in the big dog Bitcoin. In terms of action, the ADV kind of remaining steady at about 70,000 contracts, actually up about 1,000 from this time last week. So you folks are still liking yourselves some Bitto options. It fell off at the beginning of the year, end of last year. That's just seasonality for you. Everything falls off at the end of the year, listeners. But we're starting to see that volume come back. And we're starting to see that again today. Already 54,000 contracts on the tape again today. So it seems like it's going to be another busy day out there. Vol-wise, similar trajectory to what we talked about out there with the big dog Bitto over there, I should say Bitcoin over there on Deribit, which is kind of trending in. It's down about 3 points to a 58 right now out there on Bitto. So still a lot frothier than a lot of the other assets you're going to look at, but coming in a little bit over the course of this past week. Let's break down the top 10 positions. What's dominating the tape out here in Bitto options right now? What are these size positions? Let's find out, listeners. Let's go to number 10. We got about 9,000 of the Jan 15 calls. So again, we're hanging out at about a 1430. So 15 would qualify as a little bit of upside. Number 9, we got 10,000 as well of the Feb 21. So even more upside there, listeners. Number 8, 11,000 of the March 11 puts. So all over the place here. Number 7, 11,000 as well of the March 11 calls. So a lot of action on the 11 strike. Maybe similar size as well. Maybe some straddles going up on that strike as well. Interesting stuff. Number 6, 12,000 of the June 10 puts. Previously, going into December expiration, everyone and their mother loved the 10 strike. There were tons of 10 puts open across the board. A lot of that paper rolled off the board with December. I've been waiting for it to kind of reestablish, but of course, Bitto's been shooting north, so maybe the 10 strike not quite as attractive to sell or to buy as it was, let's say, a month and change ago. Right now, 12,000 only of the June 10 puts open. That's also the only 10 strike in our top 10 here, so that's kind of interesting. Number 5, 13, almost 14,000 of the June 20 calls. Number 4, 13,000 as well of the March 9 puts. Number 3, 16,500 of the June 5 puts. Number 2, 17,000 of the March 14 calls. And the number 1 size position right now in Bitto options, listeners, are the June. These are actually end of month. These aren't the traditional monthly. They expire on the 30th. The June 30th 8 puts, 25,000 of those are open out there, which is kind of an interesting print. I'm going to look right now to see if I can see where that was open. Looks like most of that was open, listeners, right at the end of the year, December 27th to be precise. It's like someone came in and traded a whole bunch of them for prices between $1.10 and $1.15. Hard to tell. Let's see. Looks like they may have. Looks like some of the earlier prints were hitting the bid. So it looks like that probably. It looks like the vol came in during the day as well. So it looks like probably sales, but it's kind of hard to tell. Really have to dig in and went in a lot of different chunks. Either way, the 8 puts, they got $1.10 for them. You're going out pretty far. You're going all the way out to June, but still intriguing stuff Mr. Bill, I know you've been slowly coming over to the dark side of all things Bitto out there. What are your thoughts on Bitto these days? Have you started to warm up to it? And what are your thoughts on these crazy June 8 puts topping the list this week, sir?
Puts are schmutz, we used to say on the trading floor, right? Listen, all these products are very close to each other in performance, but also sub 39.7%. Bitto is up 40.46%. The Bitwise products up 79, 80% on their crypto index. Grayscale funds up between 49 and 65%. So there still isn't not a lot of places to go if you want this kind of exposure to Bitcoin and cryptocurrency. But again, I think that the derivatives market is really exciting. I think that as little by little these ETFs, come on board, you're going to see this volume and open interest just explode. And it's still so early in the game. Am I surprised that these 8 puts are, going to go out worthless? I guess at least no. I guess I'm not surprised based on looking at the chart patterns and where we were and what might be going on. Again, great opportunity for investors to just do cash secured put strategies or covered call, the same thing as a covered call strategy in their IRAs or 401ks. From a 35,000 point view, I love the whole thing, right? But if you're going to ask me to pick a strike, whether it's going to be in or out of the money or it's going to come in or not, I mean, we all know, or at least the CBOE would say that 80% of all options expire worthless. Statistically, maybe a little bit less than that. So we just kind of go with that. We know what we're doing. We know what we're getting into when we sit to the table, right, of options buying and selling. And, we just have to, let the buyer and let the investor and speculator, just take note of how these things move. But no, I guess I'm not. I'm excited globally, but, I'm not a big short put seller kind of guy. Generally, I'm more of a buy ETF, buy the put, for some downside protection. Generically, in the big picture.
You're on the march to 100K. You don't want no stinking 8 puts. That's beneath you, Bill.
Chicken feed.
Chicken feed. Instead, we're going to keep on marching right on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, the portion of the show where we explore everything outside of the big dog, which is Bitcoin. Except for right now, when we look at the top 10 from a market cap perspective right now, listeners. Let's see if there are any interesting shakeups we could find out here. Number 10, we have Polygon holding down the number 10 spot. $9.5 billion is what it cost you to break into the top 10 right now, listeners. That's actually up a wee bit from where it was. It was $8 billion, if not a little bit shy of that, not too long ago. So that, again, reflects the broad rally we've seen across most of the crypto space. Number 9, our old friend Doge, $11.5 billion. Number 8, Cardano, $12.8 billion worth of market cap. Number 7, Binance USD, $15.4 billion. Number 6, XRP, hanging out at pretty much $20 billion exactly. Don't see that too often. Number 5, USD coin, we got 42, almost 43 billion. Number 4, BNB, 48 billion. Number 3 is Tether, 67, almost 68 billion. Number 2, it's ETH, 190 billion. And number 1, the big dog, which is Bitcoin, 441 million, down slightly here on the week. Let's go on out to our old friend ETH, also down a wee bit this week. At the end of our last show, was hanging out a little bit shy of 16 and a quarter, about 16.23. Coming into today's show, right around 15 and a half, puts it down about 72, almost 73 handles from where it was this time last week. So taking a bit of a respite out there in the ETH land, and the range is pretty much reflecting that as well. The low was on last Tuesday, so right after our show, 1535, excuse me. And then the high was about 16 and a half, 1654 to be precise. That also coming on the big run up we saw this past Sunday. So, Mr. Bill, when you're not looking at Bitcoin marching inevitably towards 100K, what's catching your eye out there in the land of ETH, sir?
Well, really interesting you brought that up, because Ethereum again is the number 2. It's the silver to Bitcoin being gold. And if you just do some very simple technical analysis and you draw like a 45-degree trend line, a negative sloping descending escalator, right, from the highs in 2021 to the current price now, the downtrend in Ethereum is absolutely clear to see. I mean, there's no doubt about what's happening. But we just rallied to the bottom of that trend line. And if we break, the 1660, 1700, maybe 1800 area, then I would say that trend line has been definitely breached and that a new uptrend is in the works. So I'm kind of watching a little bit close here. I'm not saying that the jury is out yet. I'm just saying it's really interesting. Again, we're at a crossroads. And you could say this for a lot of the big names, right? I mean, we've had great rallies. Crypto got absolutely annihilated in 2022. And so the question now becomes is this just a rally, a bear market head fake, a rally to a higher end to suck in people, and they're going to turn it around and take it down again? Or is this truly the beginning of a new risk-on bull market in cryptocurrency? And again, with Ethereum, I think we need a little bit more evidence for it higher, maybe even as high as, higher than 1960 to actually say that we are in a brand new bull market trend. So waited with bated breath. And I think we're going to do it. I think we're going to break out, but again, too soon to tell.
So we're marching to 100K in Bitcoin, not quite ready to make the call for ETH yet, not 5 or 6K, nothing in that near-term horizon for ETH, sir.
Not that I can see, no. I mean, again, we have to do baby steps. We still, I believe, are in a risk-on environment. I think we're seeing it in traditional asset classes too, with consumer staples coming off the radar and rolling over, and the consumer discretionary, like the fun stuff. The bling, the fashion watches and fashion clothes, and some online retailers coming back on into the market that usually doesn't happen in a risk-off scenario. And so I just find it really interesting. Again, Mark, I have to take cryptocurrency and look at it through the same lens I look at other things. And again, I believe that we are seeing risk coming back on into the market. We're seeing it in the Qs. We're seeing it in the S&P 500. We're seeing it in the bond market, high yield. And so, again, you have to look at it separately, but then, globally and then individually. And I don't think Ethereum is just there yet, but it's possible.
Possible. I like it. Possible. Okay. Damning with faint praise. Bitcoin to 100K, ETH. It's possible. It's possible. Let's see what we're seeing out there from a vol and skew perspective, listeners. And it's kind of a similar story to what we saw in Bitcoin. Almost a 68 in terms of vol on the show last week, about 67.6. Coming in to start the show today, about exactly a 60. So coming in nearly 8 points from a vol perspective, but still fairly frothy. Skew-wise, actually swinging a bit, which is kind of interesting. We saw Bitcoin skew swing from starting to be positive to pretty much flat. Last week, we were just nibbling at positive, now actually swinging negative again here for Bitcoin from about positive 1.25 to -2. Again, not lighting the world on fire, but just an interesting swing out there. Of course, we did see a little bit more downside percolating in over there on ETH. So perhaps that accounts for that. In terms of the OI, what do we see out there? Actually, a tale of two different sides of the market here. Calls, folks want themselves some calls, more calls lighting it up out here this week. There's about 2.3 million calls open. It's up about 300,000 from this time last week. So calls continuing to grow in open interest. Meanwhile, nobody wants to touch puts. Puts, 655,000 contracts open on there. That's down 55,000 from this time last week. So we saw that call to put ratio come in markedly after December expiration. It is starting to widen out again here, where we're looking at levels of not quite 4-1, but starting to get in that ballpark, listeners. So, which is kind of where we were hanging out for a while there. So intriguing stuff nonetheless. Let's go look at the top 5 positions, see where you folks are lining up. What is open for size out there in ETH options right now? And we have an interesting smattering here of relevant strikes, I would say, and then, shall we say, optimistic. Let's start on the optimistic front. Number 5, the 3,500 strike that has 172,000 contracts open. It's up about 4,000 from this time last week. Number 4, we have the 1,500 strike. So just slotting in there, pretty much the at-the-money strike right now. That's 166,000 contracts open there. That's a newcomer to our top 5 list. Number 3, we have the 1,600 strike, so right above it, our former pretty much at-the-money strike. That has 182,000 contracts open. That's down about 12,500 from this time last week. Number 2, we have the 1,800 strike, so getting up there a little bit more now. That has 222,000 contracts open. That is down 7,500 contracts from this time last week. And the big dog out there in ETH options this week, how long were we talking about the 3,000s, listeners, right? Remember the D's 3,000s? It was dominating the tape. It was dominating the OI. Those have since rolled off the board. But you know what's still left, listeners, are the 4,000s. 240,000 of those are still open. They're still holding down the number one spot, even though they are literally unched from this time last week. So no one's really piling into new 4,000s right now. But there are still a bunch left over, and they're still sitting there. So whereas everyone seemed content to pile into the 3,000s expiring in December, the 4,000s are obviously longer term, and they're still open for size, 240,000. No one's coming to take those off yet. And they weren't really coming to take much off in the intervening week either. The volume wasn't really blowing the doors off this past week in ETH. The busiest day we saw was January 27th with 307,000 contracts lighting up the tape out there, listeners. Mr. Bill, you said earlier in the show you were looking at somewhere around 250 charts to get ready for the show today. So now a lot of our listeners are curious when we start talking about the altcoin universe. You always have some other intriguing altcoin that you're keeping your eye on. So what is lighting up your tape outside of ETH in the altcoin universe this week, sir?
Would you hate me if I said all of them? Okay. And
I would hang up on you right now, sir.
Okay. Listen, I am looking at my year-to-date returns on Keep Network, Solana, Ocean Protocol, Audius, Decentraland, Render Token, Waves, Harmony, Avalanche, Helium, Axe Infinity, Hedera Hashgraph. They're all north of 90% in the last month. There is maybe of 238 cryptocurrencies, there's like two are down, right? Natural gas is down 36% year to date, and I've got Bitcoin up 36% year to date. So I'm saying that this is what makes me so bullish on crypto right now is that virtually every single token I look at, it has a positive 2023 year-to-date return of between 220% and 10%, right? And I find that really, really interesting. Even the worst token is up 3%, 4%. It's up half as much as the S&P 500, right? I mean, and I also said in the beginning of this episode, like asset managers look to see what happens in the first month of the year as a forecast, as a foretelling of what could be going on in the future of 2023. Where are asset managers putting their money? From my perspective, they're clearly putting it into cryptocurrency, they're putting it into risk-on assets, and they're putting it into emerging markets and consumer discretionary. How could you say, with all the talk of recession, higher interest rates, all this bad news that's out there, why are people abandoning consumer staples, right? The food and beverage and washing machines and things that we need for bling and higher end luxury brands? Well, why? Because they're down like 40% from their high. And it's just an interesting place to put money. So from my perspective, honestly, Mark, I right hand to God, I went through 238 charts last night. There was only a handful that didn't look like a bottoming formation from a point and figure, from a charting technical standpoint. And I think that you have to buy the dips and sell the rips, as they used to say. Because again, even globally, because we've had such a great rally in the last month, cryptocurrency is a bit overdone on a weekly basis. I mean, it's probably as high now on a technical basis as it was, say, at the end of 2021. So I think the low is in. I wouldn't be imprudent about buying crypto. I'm not saying you got to go all in. I'm just saying that you've got to, in my opinion, buy the sell-offs, buy the dips, sell the rips until further notice. And I think that will make for a very profitable trading and scalping opportunity for 2023.
Does your love for all things altcoin, does that extend out to Solana? Obviously, we saw Solana get pretty beat up post FTX. FTX very, very firmly linked to the Solana ecosystem out there. It ended the year below $10. And now here we are. Last show was $24 again. It's given up about almost not even a buck of that. It's about 23.5 kicking off the show this week. So down about 60 odd cents this week. But are you intrigued by all things Solana? I know a lot of people really got spooked by it after all that FTX stuff. They kind of washed their hands of it. That's why I was a little surprised to see how aggressive the resurgence has been out there. Have you been watching this? What are your thoughts on all this upside we've seen in Solana of late?
Yeah, I have been, because again, I think history got future decisions, right? And at least it helps me make those decisions. And there's still so many developers building on the Solana network that this was just an unwinding of leverage. This had to happen. I'm kind of glad it happened, although I don't want anybody to lose money. Don't get me wrong. Like, I don't want mean, there's a lot of people lost a lot of money in the FTX thing, and my heart goes out to them. It really does. At the same time, I asked myself, wow, this was a massive unwinding of cryptocurrency, whether it's Coinbase, GBTC, Solana, like all these tokens down 60, 70, 80, 90, 95% from their high. But from what I was able to, I spent a couple of hours digging into Solana after our November show, and it seems to be still a very positive, excellent protocol that developers are building stuff on, and building is still getting done. And was this just a margin call, right? Remember on the trading floor, we'd have the risk managers come down with a stick or a bullwhip and get the leveraged traders out of the pit, right? Closing only, I don't care what you pay. And I'm wondering if that didn't happen, at the end of last year. So yeah, I have it, Solana around $26.26 per token, up 8% today, right? I think that's the number I'm getting. And so will it recoup and recover its all-time high? I'm not sure, Mark. All I'm saying is that I do like this sense of capitulation I saw across the entire asset class, and that I'm encouraged by.
Yeah, looking back, you don't have to go back too far to see the all-time high for Solana. It was April 3rd of last year, 136 and about 3/4, listeners. So obviously fell far from that. It is still very far from that, but obviously a little bit above its right about $10 of looks like 965 or so was the low that it got to right at the end of the year, beginning of this year. But yeah, interesting stuff. We even started talking about Solana more on the show. We kind of dialed it back because the future seemed very uncertain, and there was a lot of legitimate questions about what was going on out there in the Solana ecosystem. So we kind of dialed it back. We didn't want to be seen as promoting or even really discussing a lot of an asset that maybe had some legitimate questions about it. We're still not getting back into the options too much, but still very intriguing to see just the dramatic resurgence. Are you folks out there? Are you slinging Solana? Again, clearly someone is, because there's a lot of paper driving it back up. And I'm curious, maybe that might be a good question of the week. Have you guys washed your hands of Solana, or are you back in? XRP, this one continues to just float around all over the place, listeners. 42.6 cents on our show last week, 39.3 cents this week, so giving up a little over 3 cents. This one's been stuck in limbo forever. It's going to be until we get some sort of definitive judgment one way or the other. Man, just what a lost multiple years now it has been for all things XRP, just kind of stuck in this regulatory range it's been in seemingly forever. Doge kind of hanging out similar to last week as well. 8.8 cents last week, 8.6 cents this week. It's not a huge change there. Litecoin, same deal. $90 almost exactly last week. 90 and about a quarter this week. So not a huge evolution there. Cardano, same thing as well. 37.6 cents last week, 37.3 this week. So again, it's kind of a shrug your shoulders kind of week. Everyone may be waiting for that next shoe to drop. We obviously have the Fed this week that dominates all market discussions these days. So might make sense, folks keeping their powder dry a little bit ahead of that big number and that big announcement. Polkadot, 670 last week, 616 this week. So giving off about 50 odd cents this week. And everyone's favorite Shiba dropping a whopping 0.000001 over the course of the past week.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions. And Mr. Bill, I wanted to get your thoughts on the results of our annual sentiment poll. We do this every year, usually the first week in January. See what folks are feeling for the coming year, how bullish they are in different asset classes. And we usually give them similar choices every year. It usually breaks down to different segments. So this year we said, hey, if you had to buy a 10% out of the money call expiring at the end of the year on one of the following products/market segments, which one would you choose? Gave you 4 choices, S&P, so your general stocks, Bitcoin, WTI, or VIX itself, volatility itself. And Mr. Bill, the results came in, the audience choosing stocks kind of overwhelmingly, nearly 43% choosing a 10% out of the money call in SPX, going back to where S&P was when we posted this poll. That's not looking too bad, obviously giving some of that back today. Then we had a tie for number 2, 25% each, which was kind of surprising for WTI and for VIX. And then, Bill, bringing up the rear, which kind of surprised me, was Bitcoin. Only 7.1% of our audience wanted a 10% out of the money call in Bitcoin. Right now, that call's already looking good. I thought just how much Bitcoin has been beaten up, just statistically, some more of our audience would want to take that flyer on Bitcoin. If we look back to last year, I think that was roughly half of what the percent was last year. This time last year was about 14%. This year, about 7%. So, Bill, are you surprised that pretty much half as many folks this year as last year wanted that 10% out of the money call in Bitcoin, sir?
Actually, I'm not surprised at all. Why? Because you have to sell. You've got to sell the rumor and buy the news, right? I mean, we saw it in inflation numbers. We saw it when billions of dollars flocked to the I bond that the Federal Reserve was promoting, right? Lock in a 9.6% rate of return. I mean, my phone was off the hook with people trying to get me to buy I bonds, and I'm like, no. When you're long I bonds, you're short bonds is really what you're short the 10-year. You're short the 20-year, right? When rates were trading like 4.5%, the I bond, in my opinion, was one of the worst economic or financial decisions for people. Thankfully, you can only do $10,000 at a time with that. So for me to see these numbers only wants me to bet on the long run, the long shot Bitcoin, and that the 10% out of the money call is going to probably go deep in the money. And we'll have this conversation again in the last week of 2023, right after Christmas, and then just summarize how this is going. Because again, we're seeing some really interesting, big money flows in U.S. versus emerging markets and international. And from a big picture, Mark, I'm just going to say that I'm going to say something that sounds crazy, but we experienced something called the lost decade in the S&P 500 and QQQ from about 1998 to 2008 or 1996 to 2008. And I'm wondering, is it possible that we are entering a lost decade again? Because good Lord, those returns that we saw in the Qs from 2010 until 2022 of like almost 500%, like that needs to be digested. And I'm just wondering, again, out loud, as I take these kind of surveys into consideration of what I see and I compare them with what's really going on, is I wonder just how you and I might have to take the opposite side of that trade as market makers.
Wow. Bold predictions coming out of Mr. Bill here today. Bitcoin marching to 100K and lost decade perhaps coming up here in all things S&P, Mr. Bill. That's a lot to unpack.
I know.
Unfortunately, that music means we've run out of time, sir. We have a lot to discuss, sounds like, on your next appearance, Mr. Bill. But before we go, sir, if folks want to check out what you have cooking over there, I know you're still working on a book. If you want to give some plugs for that as well, have at it, sir. The floor is yours.
Oh, I really appreciate that, Mark. Yes. I finished I got the revision back from the editor. I had to do another preview. I'm adding a couple of extra chapters. I'm hoping to get it on the Amazon Kindle digital platform. Again, it's the essential guide for estate planning professionals. It's a toolkit for helping estate planning attorneys and financial professionals recover cryptocurrency on behalf of their clients. And again, this is more to spur a conversation between client and the estate planning attorney or the financial professional of the things that are needed in order to successfully recover cryptocurrency for your estate. And I think it's not a big book, right? But I think it's not that I think. I know it's filled with incredibly valuable information that will help anybody in the financial services business who's actually dealing with the retail client.
There you go, listeners. Check it out. And of course, in the meantime, if you want to give Mr. Bill a follow on the old Twitter, see what he's working on. It's at Cenacle Capital, Cenacle Capital, all one word. And of course, you know where to go to sink your teeth into all of the analytics we've been talking about here all show long. Amber Data, AMBERDATA.io is the place to go to kick the tires and light the fires. That is going to do it for us here on the network today. Listeners, don't worry for all you pro folks. Back again tomorrow with a great pro Q&A with our old friend, Mr. Ash Vyas. Haven't checked in with him in a while. Get his thoughts on the markets from last year, the crazy markets of this year, the vol space. He's always got some great dubious correlations when he comes armed with. He'll be answering all your questions. So get those in now if you haven't done so already. Then, of course, Options Bootcamp, Options Playbook Radio coming at you, and a second pro Q&A for all you pro folks over there on Wednesday. So it's another double pro week, listeners. TheOptionsInsider.com/pro is the place to go to play along with all of that. Thursday, this week in futures options, as well as the option block. Twyfo, of course, we do touch on crypto on that program as well. Friday, volatility views, and for you pro folks coming back with options oddities. Then all the way back around to next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.